So now we're going to continue with our look at the major markets, and we're going to move into the dollar. The dollar has, of course, been slammed as we have seen the Fed and other central banks printing like crazy. And the 6-something% drop by the dollar may not seem like that much, but it's big for the dollar. And overall, the reflection of commodity prices, and specifically gold and Bitcoin and silver, they had such big years. Well, Bitcoin beyond anybody's comprehension. Well, except for maybe some of those people that thought it's going to 25 or 50,000 that have been proven correct at this point. So now let's take a look as we switch over from this light crude market to $DXY. Again, what we're looking at in here is cycle analysis. And you can see in here now, as we bring in a little more advanced things, is that there are cycle harmonics in here. We call these harmonic families. You can see where there's low lines up here. There were 3 cycles right over there that bottomed. Where the low lines up here and 3 cycles bottomed, you get a pretty big size decline. Here you got, well, a more modest decline as it fell about 8% down right in here. And here you could see kind of a mid-cycle where there were only 2 cycles coming down there, as here and here you get those bigger declines. So coming into our analysis last year in 2020, what I had said was, let me just bring this in a little bit closer for you right here. What I had said was that, well, we thought that the stock market, that the dollar market would fall. The dollar was projected for a large drop, and it ended up moving down close to 7%. For the year right now. The cyclical projections that we had were that you had this formation right in here, this diamond, and then it was likely to break down and move down. We projected it down to 88.20, and you could see it got very, very close right over there. The decline we thought would actually come down into 2021, and we still think that there's downside to come. We're going to project in here because we have these 3 cycles that are proving to be coming down together, that it is very likely to continue downside with a low between May and July. The expected range is 84 to 94. So we think it'll get down to 84. Now there's support at 88 right over here. It could stop there. This is the 84 level right over there. And you can see that the message I had in here was the period of extreme risk started in July 2020, and it projected down into April to July of 2021. So that was the old analysis, and we tightened it up a little bit here, May to July. And that says to us that you'll get down in this period somewhere down 84 to about 88 to about 84, and then turn up. And we expect a small change on the year. The reason for that is because we expect it to bottom in here, and because we believe that the deflationary forces will re-emerge. That's going to make money, cash money, dear again, and likely going to be responsible for what we think is going to be a negative period for the stock market, and we'll see the dollar recover and come back. So you can see the major bottom that's right in here, and if you look at this nested area right over here where the correction came, once you got where these 3 cycles were rising, you got a big rally, and that's coming right over here. Actually, if I look back and you look at these big harmonic families, you can see right over here, let me just take a peek right there, where these cycles bottomed right in here and it got hit like we are right now. You had this giant rally where all cycles were moving up. So you had that here and you had that here, and that's why we believe the dollar low will be made sometime in this spring to summer period, and then be moving up again. The question is, will it be a huge rally as deflation really, really is powerful, or will it be only modest and come back? So overall, what we're projecting is that it will come back and only be a small change for the year at the end of the year, but it actually could be, in my opinion, up for the year, depending on how much other markets get sold and how scary it gets, assuming it does at some point, when it appears that the Fed's liquidity is going to dry up. So that's a look very much at the dollar index, and you can see the beautiful cyclicality in there and the harmonic families, the cycles in there. You can see our 20, 40, and 80 weeks. Remember, our level 4 members, they can ask us for these charts if they wish, and we'll be glad to give those to you because they are for the Thinkorswim platform. So beautiful looking cyclicality in here, and a pretty clear look at what we think will happen to the dollar down into sometime into, we'll say, Q2, and then coming back. That's really what it looks like to us using that cycle analysis.